All right, so let's just take a review the market, and again, turning points. And the other thing is, we're taking a look at is where to find trades, and only analyzing those places. There's other places you can analyze, but the thing is, the difference between a false signal and a real signal is the level, meaning signals that are without levels have very high degree of randomness, meaning you don't know what is it. Is it because at least with a level you know that that was a prior area of buying or selling, and then if the same thing happens again at or close to that level, then it is likely that same buying from a prior level will tell you that, hey, it's going to the same level, this is where the buyers were, and now they have another opportunity to buy some more. Whereas without a level, it's just it could be anything. There's no context, there's no reason, there's no evidence, there's nothing. It's a little blip. Could be totally it's just unstructured data. That's what I'm trying to get at. Unstructured selling, and you cannot rely on it to say that this will continue in the way you can rely on a pullback. Anyway, so the market goes up, gets overbought here. What happens? Very important. I love these climaxes because I get really confident when I see them. So here you go. There's the climax, takes out the low. Where does it go? Right there. Takes out the low. Very nice. Right there. So that, when it goes up and you have those big prints with 61,000, which is the biggest since all the way back there. So, and once the market breaks that area, and this is important, that area becomes resistance. Again, once you have high volume up there and the market breaks, it is evidence that that area is distributive and it is resistance. You have that volume print, it is resistance. Why is it resistance? Because someone sold there 61,000 contracts, and when prices go back at that level, three things can occur. It is resistance because of these three things. One, the seller will continue to sell. Two, new sellers who see that much selling will enter the market. Three, those who are on the opposite side will cover to get out even. So you have these three things that make it resistance. That's why volume is important, because it shows evidence that there is selling, and selling or buying can attract more. So in this case, it's selling, so you can have the existing sellers sell more, you can have new sellers sell more, and you can have buyers cover their position at break even. So that's why this is resistance, and it's pretty climactic, not over too much, but it's a lot since the low for sure. And the market cracks, gives the test, and breaks. All right, now do you have a big count and all that? No, you don't. Okay, that's it. So that it shows you the top of a rally. The climax here is the top of a rally or the top of an overbought area, creating a very nice base break, volume at the top. This is your climax. Is there big money on the downtick? Nah, I mean, there's just 27,000 there. It's bigger than a lot of these prints. Bigger than 1, 2, 3, 4, 5. No. It's not bigger than the 46. So I don't see a clear change of behavior. What I do see is a climax right at the top, then this break or whatever, and then the retest, which offers the entry opportunity. And I also want to point out the reason this high here and this high here could not make a higher high and instead made a lower high is because of this climax here. The high made on top of the rally is the reason why the other highs could not get above it. The climax is the reason why the other highs could not get above it. And if you want to see that on a candle chart or wave chart, this here, that high, the amount of volume there, the climactic volume, is the reason you had a lower high, because the lower high is unable to get above the higher high simply because there's too much volume here and it's climactic, and in order to get above that, a lot more volume would have to absorb these positions. So the sellers established a position, went down, came back up. Either the same sellers continued to sell, new sellers started selling, and the shorts, the longs, they would have to cover break even. Okay, so those three things. That's why this is important. That's the resistance, and that volume there created these lower highs, and she fell after that. So that's why volume and the tape reading chart is so important, because can you see that here on a candle chart? Short answer, no, you can't. So it's telling you that. If I see this, like after a breakout and it pulls back, and I don't see heavy volume accumulation, I'm not going to buy the pullback, because I know that as soon as it goes up here, it's going to get blocked. So what's the point? Right? There's no point. Right? Anyway, let's see the other markets. And again, all signals are shit unless they make sense where the prior buying, support, resistance levels and all that. So let's see what the other markets. So this was the ES. Let's go to crude. So first thing we notice is right here, it went up, down, up. All right, so the ABC correction. Now I wanted it to go a little bit higher into that supply area, because that's what it did before, and it sold off quite nice. This time it didn't go up there, at least not today. So we see how this thing behaves. Alright, so go down. This was the base I already covered. Buying in the base. So I can clearly tell that it's going to go higher. It goes higher. Right. Here, 93 break. Tap resistance, tap resistance, tap resistance. See, it's just tapping that resistance. Here. Then it goes up to this area. There's some sellers here. So this is what's stopping price from going any higher. This right there is causing this to stop and this to stop. That 68 is causing the 18 to 43 to stop. Why? Someone's looked at the prior high and said, you know what? That's a good area for me to sell. Let me sell. Bingo. So in order, buyers would have to take out these guys and break out. And I guess they didn't want to do that. They didn't want to do that until it went back down in the range and bought here. After that, it bounced up 34, 38, break right here, and selling ensues. All right. So the point that I'm trying to make is that when you have the high volume prints and you have a move, then that volume print can become a support or resistance area. Again, when you have a print and then you have a move, then that thing can become a support resistance print. Obviously, it's not that simple to just look for a bar, big print plus bar, and it becomes that. You have to use some common sense as well and know what you're doing, right? Anyway, I mean, this is not really, looks like a lot of ranging today. So crude, not really a great example because the move already had occurred here. That was the climax right there. You see that time to get out, the retest. This right here was holding this area. That right there, that little climax held this, and this high. This climax held this. This held the following two attempts and went back down to support. Then the buyers came, you had to move, and you had selling here and here, so we don't know who's going to win until this break. All right, let's go to the next market. Okay, so market goes up. As I explained yesterday, I wasn't too sure if this was a climax. Why? Because you want that secondary test to not break, so it should be an upthrust or a spring or just not break. That, you have climax and automatic rally and secondary test. You want it to make a lower high in this case, or if it was from a pullback, a higher low. Right, so here I wasn't too sure if this was climactic or not. After that break, 8,800. I don't know what all this is right here, and it starts accumulating right there. We have 5,000, and then there's a move. Test that area. They continue to buy in order to sweep that high. After that, puke fest. So again, not really the best trending action, offering not really the best moves. It was just support, resistance to support, and then followed by an upthrust, early morning upthrust. Which, as you know, that's what happens, right? Early morning upthrust takes out the prior session high. That's what end springs have a tendency to do that. And then you have this break. 10, 12, 28. That's the highest print. And then finally, and this just goes to around that 28 area. And now it's too close. It's the end of the day, but the idea is, for example, if the trend was up and you have this high volume with nice fall through, chances are as it pulls back, it would react at these volume prints and continue higher. Why? As I explained, the three reasons. There's heavy buying there. There's 4,500 plus almost 3,000. So that's about 4,500, 5, 6, 7,500 contracts. So someone was buying. Chances on the pullback, they will buy some more. If they may not, but others have seen that buying, they will want more. And then finally, whoever's on the short side of that trade will want to get out because they're losing money, and I'll create the short covering. So really quite uneventful. I don't really see anything good other than the prior base. That base here was absolutely perfect. You have your climax right there, and I explained to everybody how important this is, the climax. Climax, it is, in my opinion, if you ask Wyckoff what's the most important behavior, I think he would say climax. Why? Because not only did he start off his entire work with the climax in the study, the first study in his course, but because the climax is considered ending action, so you would exit the position and then look for a new trend in that area to develop. So that's where you get out and close to where you get in. It's telling you one move is ending and another move is beginning or going to begin if the process of, the secondary test and the change of behavior and all that, accumulation processes, if they occur. So I think this is the most important, and especially in basis, I want to see climaxes. Also on daily charts, you can see climaxes all the time. You don't have to see them on top. There's a big error that a lot of guys on YouTube, what they do is they look for at a chart and they're like, oh, look at the high, and they look at the volume below and there's a big spike and say, oh, that's the climax. They don't realize is anytime there's a rally and there's a pullback, rally, pullback, rally, pullback, on the pullbacks themselves, you have climaxes. Those are called minor climaxes. On the pullbacks, you have climaxes, and you can actually seek entry into the market on the pullback. On a daily chart, you can have tons of minor climaxes on almost every pullback. Right? So not every pullback, almost, but I mean a significant number of them will have it. Even on the SPY, they're there. Anyway, long story short, this was the best because it kept going down, 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 boom. Right there, there's the high volume print. Right there, basis, establishes the high, breaks out, high volume print, offers the pullback, and boom, again. So, I mean, this is, if you want a case study, this is it, right here. If you want intraday case studies to look at, to basically, because they're going to happen again and again, right? This is one of them. I'll show that now. So first you have of course, you have these white lines, which is a zone or a level. That's what you should have first and foremost, because you do not want to trade willy-nilly. You want to trade at predetermined points that you have planned in advance. So you're not, for many reasons, but let's just keep it at that. And the second thing is, once it's there, you have your climax. You have your, somewhere there's a high upticks right here. I can call that change of behavior. Right there. Why? High uptick, white box. The white boxes are significantly more volume. White boxes mean more volume, where the red and the green are showing effort or breakouts and breakdowns. So the red and the green boxes are showing trying to lift and break through here, but here, for example, this red and this red is effort. Why? Unable to break down, right? If it was a bunch of numbers here, that means that effort gave it a reward. This effort gave a reward, but didn't. Why? Not a lot of follow through. Anyway, the climax, the change of behavior, you have your high volume prints, you have your low volume testing right there where it says LVT, right? Low volume testing. Then you have your spring right here, this low. And you have your higher high right there. Perfect. Has all the elements of the base. If you also want to talk about higher lows, that's also here, as you can see, right? And very important, look at this line of support that is established. All of that is there. You're good. As soon as it takes out the higher high, you're banking on all of this support. Put your stop under and go. So this is very important, and this is really like a case study. And it's going to happen again. Here you have the resistance areas here, right? But the damn thing didn't have a climax. So it had this high volume print, but I can't rely on that. So, you know, the pullback, when it does this and doesn't have climactic action and it's not with trend, a lot of times those bases or whatever is just a pullback to a support area. And that's exactly what happened. This is why there's a difference between getting a move that's a rally versus getting a move that's a pullback. This base set up a pullback to this support level that was by this line of support. And then that created the upthrust, and up here there was no volume buying and they just sold it off, right? And now where are we? Back in this range of support. So, which by the way they bought. See this area here is a support. I think it sprung it. I'm not sure if it's, yeah, maybe sprung that. And then look at the heavy buying that emanated after that shakeout possibly. So that's all, folks. Take care. Have a good weekend. Bye.